Eric Mother.com with a weekend market analysis for US markets for the weekend of September 12th and September 13th, 2015. Take a look at how markets closed on Friday. Slightly up gain for the major averages. Let's call it about 0.5% gain for the day. We see that crude oil was down about 2.5%. We see that the VIX was down about 4%. For the week, S&P 500 was up nicely, up about 2%. For the week, the Dow was up 2% also. And for the week, we see that the NASDAQ was up the most, up close to 3% for the week. Let's begin by taking a look at the NASDAQ weekly. And we can see here a simple understanding of how markets behave. On the way up, markets maintained action above the 10-week moving average. When markets were moving higher, as you can see, markets tended to use the 10-week moving average for support. So if I was to summarize this video, you can see now the 10-week moving average seems to have become resistance. So yes, the market is confusing, but we can see that if we really simplify this, we can see that what was support on the way up as of right now seems like it is resistance, probably predicting over time that the market wants to go down. If one is looking for reasons to be long, you can use the NASDAQ weekly chart, which is showing double bottom support in terms of the weekly RSI right here. So this week we can see that over the last 3-4 weeks, the market's action has led to the formation of a nice double bottom on this line of support. As long as that's the case, this market could actually move higher, surprisingly. You can also see here that we came close to the blue line and the market held, which is October of last year. And actually going back to the lows of late 2012, that's where the market also held. So I think as long as the market is showing support on this very simple line on the weekly RSI, going back about 2 years, as long as that's holding, one can actually, surprisingly, not be too surprised if the market continues to build on, and especially if the market can recapture the level above that declining 10-week moving average. If we take a look at the NASDAQ on a daily chart, 1-year daily, go back to these highs, late 2014, and draw a line from there. Should be something like that. You can see that this is where the market broke out. Sometime in February of this year, market went on a nice run. It happened to use the same line for support. And finally, we came back and broke through. Once we broke through that level, market's been struggling. You can see we broke here, and since then we've been unable to move back above that line of resistance. So if the market is to move higher, I would suggest that this is the first thing it needs to do, is move and reclaim the level above the recent break level. Now this can also be seen from another point of view, which is this break, and we see this in markets across the globe. This line here, this break, you can draw it this way, extend it. See, the market is struggling here, so that's one way you can draw this. And until such a point as the market can move above the red line, I think this is a stall point. We can also see that you take this break and then draw a line from there. The market is struggling to hold above that line. Hope that makes sense. So until it can move above that red line, I think the market continues to have to prove itself. And keep in mind, we are trading now below the 200-day moving average, and we are also trading below a downwardly and steep downward facing 50-day moving average. Net, I think the indication continues to be that this market is choppy with a potential of downside risk. If we take a look at the Dow weekly, just like the NASDAQ, when markets are acting well and trending higher, you see they tend to trade above the 10-week moving average, using it for support. But now we are looking at a different phase where the market seems to be using the 10-week moving average recently for resistance. As you can see right here, this has become resistance, and we continue to trade below the 10-week moving average. Net indication is that US markets are also needing to prove themselves over time. Take a look at the daily, and on the daily for the Dow, and I'll show this on the SPX, we seem to be forming a wedge. I'm sure you've seen this on many charts, and eventually we are going to have to decide which way we want to go. with the market either moving above that trend line or showing resistance. The one thing I wanted to point out is you go back to these highs here, intraday highs on the Dow. You can see that corresponds with this area here. Now there was a trend line break, I would say somewhere about here. This trend line break in early part of June, which is where the market started the pullback off the highs there. If you draw a line which is just slightly under 50 like that, you can see that every time we move above the line and back below it with uniform activity, we get a short-term high in the market, just like we did somewhere here. We got uniform activity above the red line, back below it for short-term highs. Also, this is a dome type formation. Uniform activity above the red line and back below it give us nice highs there. And even recently, before the big drop, you see that it touched the red line there, which gave resistance right there, and the market had a big drop. I think what's going on right now is the market is finding it difficult to move above this red line, and until it can do so, as long as the market is finding it difficult to move above that red line, or call it, if the market continues to trade and showing risk, whenever it comes back to this red line here, just like it did this week, as long as the market is showing resistance here, I still think that we should be trading lower. It's only when we can climb above that resistance line that maybe the market can correct some of the negative action. If we take a look at the Dow hourly, and you'll see this also in other markets, every time we come to this level here on the Dow, we seem to be stalling. Just as you can see here, there was a stall and a break of a trend, which was this drop. And every time we come close to that line, we get a short-term high in terms of the Dow. So on the way up, there's resistance, and every time recently in the past 1 or 2 weeks the market tries to go down, it finds support on this RSI lows line on the hourly. Also, you can look at this from another point of view, which is the price is showing a wedge here and also this way. So until such a point and time when we can either break out for a nice move higher or break down, we are kind of stuck in a sideways action, and that coincides with going into an options expiration week and also other market moving events. So I guess that narrowing down of this might explain the recent volatility. Markets trying to decide which way it wants to go short term. If you take a look at the S&P 500, nice gain for the week, about 1.8%, which is good. And this is actually might play out to be that this was the first signal of a potential for support. Why do I say that? If you go to a 9-year weekly for the S&P 500, just like I discussed last weekend, we can see that off the lows of 09, we broke out on the RSI. So this is a 9 years weekly chart. Lots of data here on the weekly, so we can draw a uniformity line there, and you can see the market since 09 has come close to that green line, which is this lows of 2010. It touched this line and back above it with uniform activity, which is the key. The uniform activity predicted a low here in 2011, and now we are touching that line and bouncing above it. So as long as the S&P 500 can continue defending that line, there's a good argument here that once the other short-term levels have been corrected, that this is very good support on the S&P 500 weekly. As long as it is showing support like it is doing this week, support on this weekly chart suggests that this is where it starts building. The other problem now is if it goes on in the coming weeks to break below that red line, then that's when you should really be looking for an even deeper correction. If you take a look at the S&P 500, just like the other major markets, you can see that there was a break here. This break in the S&P 500 daily chart was responsible for this price break, and of course we know we got this huge plunge, and now what the market is doing is testing that line and struggling to hold above it. So that break level is where the market is struggling. As long as we are trading below that blue line, we might have to test the lows. If the market can climb above that resistance line, then maybe there's more upside to be seen. Right now, since we haven't broken above that line, I have to suspect that still a lot of work to be done. Now, if we take a look at a closer view of this daily chart, let's say we go to a 6 months daily view for the SPX, you can clearly see here that on a day-to-day basis, this is a nice wedge, price wedge, that the market is going to have to get out of that wedge for a move lower or for a move higher. So that's very clearly defined. If you want to see it even better, take a look at a 3-month daily chart, and on this daily chart, 3 months of data, again connecting the closing, daily closing, gives you that wedge. So the market still has to decide whether it wants to move above this line or not. Keep in mind, now that we have a closer view, what I was getting at here is ever since this break, this level, this break here, the market has been struggling to hold above that red line, and you can see this clearly because now this is a double short-term double top on the SPX. This break here was responsible for this move that brought the market to such a big drop. So until we can move above that red line, my contention here is that the market should continue to struggle. Take a look at the S&P 500, and we can see another wedge on the hourly, clearly defined by the tops like that, and also from the downside like that. So as we go into the new week, market's gonna have to decide which way it wants to go. You know, generally speaking, and this gets a little bit confusing, sometimes the initial move out of the wedge can be the fake move when the true move is lower. So bear that in mind, that sometimes it might start by breaking that, but yet what the market wants to do is move higher. So be careful. Just because it moves out of the wedge does not necessarily mean that that's the true move. You need confirmation out of that wedge. So we're gonna, I guess, have a volatile week as we decide which way the market is going to resolve coming out of this very well clearly defined wedge. Let's take a look at Apple here as it makes an attempt at moving back above the 10-week moving average. If it is to correct the chart, that's the first thing it needs to do, is move above the 10-week moving average, something it hasn't done since it broke sometime here in middle of July. So moving above the 10-week moving average would be the first order of business to repair this chart. Now if you take a look at a longer view, just like the S&P 500, coming off the lows of 09, right here, there was a nice entry off the lows, which is somewhere here on a split adjusted basis, somewhere around the mid-teens. Now draw a line from there and you can see that this is where the stock has been using for support. It held nicely in 2013 during these lows, and as of right now this is uniform action below that green line and back above it, suggesting that the stock is already repairing itself. At this rate, if that can hold and it climbs above the 10-week moving average, then that's all you need to see for a stock that could be in recovery mode. If you take a look at Apple, let me show you a trick here, and it is to draw a line on the monthly. So this is a monthly chart going back to 2002. If you draw a line just about the 61.8 level on the monthly, stock gives you a lot of information. You can see that when it's trading above the line, it tends to have a nice move. So let me show you that. You can see above the line here, above 61.8, stock tends to have a nice rally during this period. It held above 69.1 again during this period here, which is this nice move. It held above 69.1. Even now it still continues to hold above 69.1. So what I'm getting at here, as you can see in other periods going back about the last couple 10 years or so plus, it held support at 61.8 roughly, held support here back above 61.8, and then again held support here, and now it's trying to do the same thing. In other words, if the monthly can stay positive and continue building, and especially if it can move its monthly RSI above 61.8, then the stock could be in play, and that's exactly what it's trying to do, trying to find support around that 61.8 level. If it can hold above that, that's good. Otherwise, if it stays below 60, if it stays down for the month especially, that's when you want to avoid trying to find a bounce in the stock. A look at the daily, you can see that off the intraday highs right here, that was the highest intraday close. And if we can go back and see that that was up, after that there was a break on the trend line. So beginning of June, we broke below that trend line there, which is off the highs. If we draw a line from there, we can see where it's been struggling, and I'll draw it like that, just slightly above 50. You can see uniform activity above the red line, back below it. That was a sell signal during this spike and a drop. So that was a short-term sell signal, and now we are coming back to test that red line. We've seen that other markets are struggling to hold that red line. I would speculate that the more it shows resistance on the red line, the more on a day-to-day basis it's gonna pull back. Keep in mind, it's trading well below the 50-day moving average and the 200-day moving average. So net, I would look at this chart to be a little bit suspect, with signs of support on the weekly and on the monthly. Now, if you can see this, if you can see the stock move above the red line, short-term daily resistance, then that's your indication that the weeklies and the monthlies are correct in predicting a nice recovery for the stock. So I think that's how I would summarize this. Anything back above 50, substantially above 50 for Apple, would suggest that it is due for a nice move higher. The best way I would summarize this video and this analysis is, as long as you have some of the major markets being down, for example, the Dow is down for the month, I think it's not a good idea to go long. As long as the S&P 500 is also down for the month, I think it's not a good idea to go long. And right now we are showing the NASDAQ, which is positive for the month. That's okay. You need the Dow and the S&P 500 also to be positive for the month before you can try and find long side ideas. Why do I say that? It's because as long as we are down for the month on either one of the major averages like the S&P 500 or the Dow, the indication is that the monthly charts are still showing 3-year highs, 3-year lows on the MACDs, which is bearish, and 3-year lows on the 3-year lows on the RSI on the monthly, and 3-year lows on the MACD is not a good sign, especially as far as the Dow is concerned. So that's one way I would play the market, is before you get aggressively long, you have to insist that all the markets, the main markets, the Dow, S&P 500 and the NASDAQ, all have to be positive for the month before you can have some conviction to the upside. S&P 500 as of right now, to take a look at the SPX, we are still looking with a threat of breaking below 50 and continuing to push to fresh 3-year lows, just as we've already seen that the MACDs are trading at fresh 3-year lows and also pushing below zero. So until you can see all markets, the Dow, NASDAQ, S&P 500, all the 3 major averages in the US, until they are all positive for the month, I think you stay away from trying to find long side ideas. Why? Because the monthly charts are showing still a break to fresh 3-year lows. Watch out for part 2 of this weekend's market analysis, which should be due on Sunday. So watch out for part 2, which probably, more than likely, after my research in the weekend, should have some ideas in terms of either long or short ideas. Eric Muadid, Muadid.com. Good luck, peace, and blessings. EACS.